My first losses in the market, what I truly learned.
So, you think trading is your golden ticket to freedom? It's adorable. Let me save you some time. It is more like buying a front row seat to your own financial demolition derby. In this video, I will walk you through my first glorious market disasters, from turning spare cash into instant regret, to discovering that stop loss is just a fancy term for pressing the self-destruct button. Forget the Instagram gurus with rented Lamborghinis and fake smiles. This is the real, unfiltered, and painfully hilarious truth about losing money faster than you can search how to become a trader. If you've ever fallen for a hot tip from a guy with a wolf avatar, trusted a YouTube prophet in a rented suit, or convinced yourself that losing money is just part of the learning process, congratulations, you are in good company. This is not financial advice wrapped in positivity. It is a brutally honest confession about how the market chews up overconfident rookies and spits them out broke but wiser. Stick around, because laughing at my disasters might just save you from starring in your own.
From zero to negative in record time.
They say the journey of 1,000 miles begins with a single step. Mine began with a single click and ended in a financial crater so deep I could hear echoes. It all started innocently enough. I had some spare cash, a burning desire to make my money work for me. In the overconfidence of someone who once won a fantasy football league, I opened a trading account, armed myself with research, read 3 YouTube videos and a Reddit post from a guy with a wolf avatar, and declared myself ready to conquer the market. The first day felt like a movie montage. Charts danced, numbers flashed, and I could almost hear motivational music swelling in the background. I made $12 profit on my very first trade. 12 whole dollars. That is nearly a burrito with guacamole. This was it, the start of my billionaire arc. Naturally, I decided to double down and then double down again. See, when you win once, you do not think that was lucky. You think, I am a market genius, an undiscovered prodigy, the Warren Buffett of my neighborhood. But the market, well, the market loves to humble people like me. The second trade, down $50. Third trade, down $200. By trade number 5, I had successfully converted my spare cash into a case study on poor decision-making. Now, most sane people would stop. They would cut their losses. Not me. I was not losing money. I was investing in the learning process. At least that is what I told myself as my account balance sank faster than my motivation to hit the gym. I became an expert in emotional gymnastics. Every loss had a silver lining. That is fine. I am in this for the long term. It is only a paper loss until I sell. This is just market noise. I am playing 4-dimensional chess. Except it was not chess. It was me throwing darts blindfolded while the dartboard was actively on fire. The worst part? I started researching more, which in my case meant finding other people online who had also lost money, but in an inspiring way. I watched videos of traders bragging about how they lost $30,000 but came back stronger. I thought, if they can lose $30,000, surely I can lose $500 without breaking a sweat. And oh, I did. In fact, I smashed through that goal. My account hit negative territory faster than a crypto influencer changing their Twitter bio to entrepreneur. The day it happened was oddly anticlimactic. I woke up, checked my account, and there it was. A red number so large, it felt like it was personally mocking me. No dramatic music, no thunderclap, just me in my pajamas, staring at my phone, wondering if this was the part where I learned a life lesson or just ordered pizza and pretended it did not happen. Of course, I tried to recover. Every gambler, sorry trader, thinks they can make it back. I went in harder, risked more, convinced myself that I was due for a win. Spoiler, I was not. By the end of the week, my account balance looked like a crime scene. The only green I saw was in the avocado toast I could no longer afford. But here's the thing, and this is where I get philosophical. Losing that money was strangely liberating. Because once you have gone from zero to negative in record time, you stop caring about being perfect and start embracing the chaos. You realize the market is not a neat little puzzle you can solve. It is a wild, uncaring beast that occasionally throws you a bone just to watch you chase it off a cliff. Now, whenever someone asks me for trading advice, I keep it simple. Do not risk money you cannot afford to lose. Never believe a guy on YouTube who records in his car. And if you ever make $12 profit on your first trade, take it, frame it, and retire immediately. As for me, I am still trading. But now, I do it with the kind of cautious pessimism usually reserved for horror movie characters who hear a strange noise in the basement. My goals have shifted too. I am no longer aiming to get rich quick. I am aiming to not completely bankrupt myself before lunch. And maybe, just maybe, that is the kind of realistic ambition the market was trying to teach me all along. In the end, I did not lose. I invested. Not in stocks, but in humility, sarcasm, and the unshakable ability to laugh at my own catastrophic decision-making skills. And if that is not a priceless return, I do not know what is.
Stop loss. More like the self-destruct button.
Every financial guru out there will tell you that a stop loss is your best friend. It is there to protect you, to guard you from catastrophic ruin, to be your personal superhero in times of market chaos. What they fail to mention is that for beginners, the stop loss often functions less like a protective measure, and more like the big red button in every action movie that blows up the entire building. And in my case, it did not just blow up the building. It took my ego, my optimism, and my dignity with it. It began on a Tuesday, which I now regard as my personal day of financial infamy. I had been trading for a grand total of 3 weeks, which obviously meant I had the wisdom of a Wall Street veteran. I had watched 2 full online courses, read half a book about candlestick patterns, and scrolled through an alarming number of inspirational Twitter threads by people whose only real job was apparently tweeting. Armed with this wealth of knowledge, I opened a position on a stock that was sure to break out. My technical analysis was flawless, or at least, that is what I believed after spending 40 minutes drawing colorful lines on a chart. I set my stop loss like the professionals do, telling myself that I was being disciplined and responsible. That stop loss sat there on my trading screen like a silent guardian. I felt safe, protected, almost smug. My thinking went something like this: if it drops to that level, the system will automatically close my position. I will walk away with minimal damage and live to fight another day. What actually happened was far less cinematic. The market, apparently sensing the presence of a naive investor, decided to make a quick, sharp dip, exactly to my stop-loss level, triggering the sale of my position in less than 5 seconds. Then, with a kind of cruel precision that can only be described as personal, the price immediately reversed and shot upward like a rocket. If I had held for even 3 more minutes, I would have made a respectable profit. Instead, I was out of the trade, watching from the sidelines, clutching my coffee mug like a war veteran, recalling the battle where everything went wrong. My minimal damage ended up being the most expensive lesson of my trading career so far, because the damage was not just financial. It was emotional, existential even. The stop loss had done its job, technically speaking. It had stopped the loss. But it had also stopped my chance at any gain. And it had done so in a way that felt like being slapped in the face with my own trading plan. The worst part is that it happened again, and again, and again. It turns out that in volatile markets, stop losses can be more like tripwires than safety nets. One tiny flicker in price, and boom, you are out. And then you get the privilege of watching the trade you believed in succeed without you, like an ex who suddenly became attractive right after the breakup. I began to suspect that the market had a personal vendetta against me. Every time I set a stop loss, it was as if the price sniffed it out, dipped just enough to trigger it, and then smugly went in the direction I had predicted all along. After a few weeks of this humiliation, I considered removing stop losses altogether. But then I remembered the alternative: holding on to a losing trade, until my account balance resembled a tragic GoFundMe campaign, so I adapted. I started setting my stop losses further away from the entry point. This reduced the number of times they were triggered by random price noise, and increased the size of my losses when they were finally hit. Progress, I suppose. Now I view stop losses with the kind of cautious mistrust one reserves for coworkers who accidentally copy your boss on private emails. They are necessary, but they will ruin you if you are not careful. They do not care about your feelings, your plans, or the fact that you were really hoping to pay rent this month without selling furniture. If there is one lesson I have taken from this saga, It is that tools are only as good as the person using them. And when the person is me, the tool tends to become a weapon of self-destruction. So whenever someone on an online forum tells me, always use a stop-loss, I nod politely, smile, and I think to myself, yes, I will. Right after I finish reinforcing the walls of my trading account, so that the next time I press that big red button, does not take my entire financial house down with it. In conclusion, a stop-loss can save your life. But if you misuse it, it will just as happily blow you up.
Betting against logic and winning experience, that is all.
Logic is boring. That is what I told myself the day I placed my first completely irrational trade. After all, if everyone followed logic, no one would buy lottery tickets. Pineapple on pizza would not exist. And my aunt would not still believe that Facebook posts can cure diseases. In the world of trading, logic is supposed to be the golden compass. Analysts will tell you that with enough data, enough charts, and enough coffee, you can make rational decisions that lead to consistent profits. That sounds great in theory. In practice, it is about as useful as an umbrella in a hurricane. My adventure began when I stumbled upon a hot tip from a stranger on an online forum. His username was something like cryptoking for 2.0, which in hindsight should have been my first red flag. He claimed that a certain stock was about to go parabolic. There were no charts, no detailed analysis, just a meme of a rocket and several flame emojis. Clearly, this was financial wisdom of the highest order. I looked at the stock. It had been dropping for weeks. The company's latest earnings report was a disaster. The CEO had just resigned, and their product had been voted most useless gadget by a tech magazine. In other words, every logical indicator screamed, "Do not buy this." So, naturally, I bought it. My reasoning was simple. If logic says no, then the market will probably do the exact opposite. I was playing what I like to call inverse genius, a strategy where you deliberately ignore common sense in the hopes that the universe rewards your bold stupidity. At first, it was exhilarating. The stock dipped immediately after my purchase, which was expected. That is what happens when you buy something doomed. But I held on, convinced that my gamble would pay off. I told myself stories about legendary investors who bought when everyone else was selling. I conveniently ignored the fact that those investors had actual reasons while I had a rocket emoji from a stranger. Days passed. The price continued to slide. My account balance looked like it had been mugged. Friends who knew about my trade asked how it was going, and I replied with vague statements like, "It is all part of the plan," which is the universal language of someone in deep denial. Finally, the inevitable happened. I sold at a massive loss, declaring to myself that I was cutting dead weight and freeing capital for better opportunities. In reality, I was just tired of staring at that red number. Every morning, like it was a toxic ex texting me at 2 a.m., now here's the twist. 2 weeks later, the stock actually recovered. It climbed slowly at first, then rocketed upward in a surge that would have made cryptoking for 2.0 proud. If I had simply held my position, I would have been up by a significant margin. Instead, I was out watching from the sidelines, feeling like someone who left a party early, only to find out that all the fun happened after they left. The lesson: sometimes betting against logic works, sometimes it does not. In my case, it worked, but only after I had already exited the trade, which is the financial equivalent of ordering dessert leaving the restaurant, and then hearing that the chef served free champagne to everyone who stayed. After that incident, I began to realize that trading is not about pure logic or pure gut instinct. It is about the unholy marriage of both, spiced with a generous dose of luck and a pinch of masochism. You can do everything right and still lose. You can do everything wrong and accidentally make a fortune. The trick is surviving long enough to experience both. These days, I still occasionally bet against logic. Not because I think it is a solid strategy, but because it keeps things interesting. The market is unpredictable, and sometimes the best way to stay sane is to make a ridiculous move just to see what happens. You will either lose money and gain experience, or gain money and lose faith in rational decision-making. Either way, you win something. In the end, I am richer in experience, poorer in cash, and infinitely more sarcastic about the idea that trading is a science. It is not a clean, orderly process where good decisions equal good results. It is a chaotic casino where the house sometimes pays you out of pity, and sometimes takes your chips just to watch you squirm. So yes, betting against logic made me win. But the prize was a deeper understanding of how little control any of us truly have over the market. And honestly, that might be the most valuable asset I will ever hold.
Influencers told me it was easy. They forgot to mention it was easy to lose.
The internet is full of financial influencers who look like they have it all figured out. Perfect hair, inspirational lighting, a rented Lamborghini in the background, and the unshakable confidence of someone who has never experienced an overdraft fee in their life. They speak with authority, they smile like saints, and they swear that making money in the market is easy. And for a moment, I believed them. It started with a late-night YouTube binge. I was watching videos about trading, investing, and wealth hacks, when I stumbled upon a charismatic influencer who called himself something like Money Maverick. He wore a crisp suit jacket over a plain white t-shirt, which I now realize is the unofficial uniform of the online financial prophet. His message was simple: with the right mindset, a small starting capital, and his proven system, anyone could achieve financial freedom. He even had screenshots of enormous profits to prove it. Never mind that those screenshots could have been from a trading simulator or a friend's account. I was too busy imagining myself sipping cocktails on a beach while my portfolio worked for me. So I followed his advice, step by step, video by video. I downloaded the recommended apps, joined the suggested broker, even paid for a premium course that promised insider secrets. The strategy itself was laughably simple. Enter trades when a specific set of indicators aligned. Set a tight stop loss and let your winners run. He made it sound foolproof, as if the market was a polite, predictable machine that respected my entry points. The first week, I lost half of my starting capital. I told myself it was just bad luck, that I needed more practice. So I tried again, applying the same method with religious devotion. This time I lost the other half. It turns out that the system worked perfectly for the person selling it. I was losing money trade after trade. He was gaining subscribers, course sales, and sponsorship deals. In fact, I suspect that his biggest source of income was not trading at all, but convincing people like me that trading was easy. The most ironic part? He was technically correct. Trading was easy, easy to enter, easy to click buy or sell, easy to believe in the fairy tale that the market would reward my obedience to a stranger's plan. But making money? That was the part he conveniently left out. After my account was wiped out, I went back to his channel out of morbid curiosity. There he was, smiling as always, talking about his latest big win and promising that anyone can do it. His comments section was filled with starry-eyed followers thanking him for changing their lives. I wondered if any of them had actually made money, or if they were all just waiting for their financial miracle. Like passengers on a sinking ship, praising the captain's charisma, I realized something important that day. The business model of most financial influencers is not actually about teaching you to trade. It is about selling you the idea of success. They feed you dreams, and you feed them clicks, likes, and money. Whether you profit from the market is irrelevant. They have already profited from you. These days, I treat influencer advice the same way I treat fast food advertising. Yes, the burger on the billboard looks perfect, but the reality will be soggy, disappointing, and leave you questioning your life choices. Do I still watch financial influencers? Occasionally, yes, but for entertainment, not education. They're great at telling stories, creating drama, and keeping you hooked. But if you follow their advice blindly, you might as well hand your money directly to them and skip the middle step of pretending to invest. The truth is that success in the market is rarely easy. It is slow, frustrating, and filled with painful mistakes. Influencers do not want to tell you that, because you will probably lose money and hate yourself in the process. It's not a great video title. So the next time someone in a rented luxury car tells you that financial freedom is just a few trades away, remember this. Yes, it is easy. Easy to lose, easy to get hooked, and easy to become another line item in someone else's revenue report.
Rich in knowledge, broke in the bank account.
There is a special kind of wealth that no one brags about on Instagram. The wealth of knowledge that comes from losing all your money. It is a luxurious treasure chest filled with life lessons, deep insights, and the crushing realization that wisdom does not pay rent. I know this because I am now a billionaire in experience and a beggar in cash. My trading journey has been like a university degree, except more expensive, less structured, and without the comforting illusion of a graduation ceremony. It all started with optimism, that dangerous, intoxicating optimism that makes you believe you are different from the thousands of people who have failed before you. I read books, watched webinars, and listened to podcasts filled with wise phrases like, "The market rewards patience, and discipline is the key to success." Those quotes look fantastic on a coffee mug. They are less helpful when your account is bleeding money faster than you can make your next deposit. The first few months were a blur of late nights, technical indicators, and YouTube tutorials with titles like 10 Secrets to Becoming a Profitable Trader in 30 Days. I absorbed it all, filling my head with theories, patterns, and strategies that seemed airtight in hindsight, until I actually tried to apply them. The problem is that the market does not care about my education. It does not care that I can identify a head and shoulders pattern, or that I know the exact Fibonacci retracement level for a given swing. It is like studying the anatomy of sharks in great detail and then diving into the ocean. You might know everything about their teeth, but they will still bite you. Every loss was a lesson. That is what I kept telling myself. This is not a failure. This is an investment in knowledge. It was a comforting thought, the financial equivalent of putting a bandage on a severed limb. I was not just losing money, I was building character, and build character I did. I learned that stop losses can betray you, that hot tips are usually lukewarm garbage, and that the more confident someone is about a trade, the faster you should run in the opposite direction. I learned to stay calm in the face of big red numbers on the screen, even if my stomach was staging a coup. I learned that the phrase, "buy the dip," is sometimes just another way of saying buy into disaster. Eventually, my account balance hit a point where recovering was no longer a realistic option. That was the day I achieved true enlightenment, and I realized I had accumulated more trading wisdom than I ever thought possible, and yet my bank account balance had reached a level so low it could have been measured in pocket lint. It was a strange kind of pride. I could now explain complex market dynamics to anyone who would listen. I could analyze a chart and spot subtle signs of momentum shifts. I could recite the pros and cons of dozens of technical indicators. And believe me, I was a walking encyclopedia of financial knowledge. But if someone asked me to lend them $20, I would have had to check between the couch cushions. The irony is that people started coming to me for advice. They saw my deep understanding of market theory and assumed I was making a fortune. I had to bite my tongue to avoid saying, "Yes, I am an expert." In losing efficiently, looking back, I see that my greatest achievement in trading so far has not been building wealth, but building awareness. I now understand risk management on a visceral level. I know the psychological traps that ruin traders. I know that overconfidence is the fastest route to disaster, and that humility is often learned the hard way at a cost. So here I am, rich in knowledge, poor in funds. I cannot buy a sports car, but I can tell you the optimal entry point for a short position in one. I cannot book a luxury vacation, but I can explain how market liquidity affects currency pairs in exotic destinations. Perhaps one day this mountain of experience will translate into actual profit. Till then, I will continue adding to my priceless mental library, while my bank account serves as a cautionary tale, because in the end, wealth is measured in many ways. Some people measure it in dollars. I measure it in scars, in sarcasm, and in the ability to laugh at the absurdity of it.
Congratulations, you're next on the market's menu.
At the end of the day, my first losses in the market were not just numbers in red. They were neon billboards flashing "Congratulations, you played yourself." I went in thinking I was some undiscovered financial prodigy and came out with the kind of bruises you cannot hide from your bank account. The market did not care about my optimism, my Reddit research, or my motivational playlists. It cared about one thing: humbling me, quickly and repeatedly. And honestly, it did a fantastic job. So here's the truth you probably do not want to hear. You will lose money too. Maybe not today, maybe not tomorrow, but sooner or later. The market will personally escort you into the hall of financial regret. The only choice you have is whether you walk out wiser or keep running back in, like a moth to a burning chart. If my humiliation buys you even a tiny bit of clarity, then great. At least somebody profited from my disasters. Otherwise, grab your wallet, your overconfidence, and your favorite excuse. Because the market is always hungry, and you are next on the menu.